Good morning, everybody. Welcome to another day of Market Report, brought to you by Mike Bjork, and happy Friday. It is Friday, September 16th. Let's kind of get into it. We do got a few economic news releases scheduled for today, and we'll start off with the Consumer Price Index. This is a inflationary index that kind of gauges on the consumer side of things, obviously with the name Consumer Price Index. So the last reading back in July, we had a 0% increase, and the forecast for July came in at 0.1, and it came in higher at 0.2% for the month of August. Now, when you strip out food and energy, which creates the volatility in there, this is kind of what more or less the Fed will look at, and that's what they call the core CPI in this scenario. So we had a 0.1% increase back in July. Forecast is at 0.2%. It came in a whopping 0.3% here for the month of August. A lot of this is attributed to higher costs in healthcare and higher costs to rents. So cost of living, of course, is going up here. This is going to lead to the Fed with their meeting next week, probably kind of give a good hard look, because the reason why they raise interest rates is to control inflation. And even though this isn't their favorite gauge, it is something that they should look at, because right now this is at year over year about 2.2%, well over their 2% mark. The gauge that they typically will look at is their PCE, or personal consumption expenditure, and that's still been stuck at the 1.6 range. But if this is going up, you got to think that maybe the PC would be going up. And right now there's a pretty good spread between the two, and that's kind of what's weighing on a lot of people's minds, that the Fed, potentially could raise rates. Now, they're not expected to raise rates next week in September, but again, there's been a lot of hawkish talk there. Of the 12 members, only 2 of them are dovish and not really so much in favor of a rate hike. The rest seem to be in favor of a rate hike coming forward. So, again, it's all going to be depending on Janet Yellen next week. So they'll start their meeting on Tuesday, and then Wednesday is when they give their announcement on there. So expect a lot of positional maneuvering up until that point. Last but not least for our data here is consumer sentiment. So the last reading came in at 89.8. Forecast is supposed to go up a little bit to 90.5, and it came in exactly the same, 89.8. So no change in consumer sentiment. So people are kind of feeling a little bit about the same of what the last reading came in at. So let's take a look at the headline news. And stock market's down. It's coming down. A lot of it, of course, still that uncertainty of what's going on with the the Fed going on next week. There's no Fed members speaking for the past week, primarily since Monday, because they go in their blackout period up until Fed meetings. Also, U.S. dollar increase went up, so of course price of oil came down. So when the dollar goes up, it's kind of tough on our exports going out, because our cost of goods becomes more expensive when we're trying to ship products out. So these are all different factors we're kind of having to watch. Now next week, it's not just the FOMC that's meeting, but Bank of Japan will be meeting next week as well, and giving their exactly on Wednesday their announcement on what they're going to do, and they're kind of expected to do some stimulus. So pay attention to what happens there as well. If they don't do anything like a stimulus, kind of like what the bank ECB did, you could probably expect the stock market not do so well as a result, because it'll probably be disappointed in there. And then, of course, we got our own maneuvering as well. So let's take a look at the bond market, see what's going on here. We're down for the day here, but what I like about this is that we're kind of changing the trend. So as we saw, we trended down this way, but we started higher from where we left off there. We started higher here. We started higher again. So here's where we started at, and here's where we are. So right now we're about 3 basis points higher than where we left off yesterday, and we're kind of resting currently right on this resistance level. So this is actually a level that we resist. Is kind of support, or not really support, but a ceiling for us to be able to try to get above. So right now we started the day above it. We were up against the 10-day moving average here. We're trying, of course, want to try to get above the 10-day and 25-day moving average. So this might create a little bit of resistance up until early next week. As you can see, they're kind of dipping down a little bit here. But in any case, we may see a lot of sideways, at some point, a little bit of sideways movement up until the Fed meeting. And then we'll get a decision one way or the other. All right, folks, but right now the rates are about the same where we left off yesterday. Again, East Coast may have had a little bit better pricing due to the start, but they'll probably get that corrected here soon, later in the day. But again, pricing is about the same where we left off yesterday. All right, folks, have a wonderful weekend. I hope you guys enjoy yourselves, and we'll see you guys on Monday. Thanks so much for watching. Take care. And also, if you guys want to get your daily updates, just go to Mike Bjork and Twitter. I do feed throughout the day updates of the market during the day. So if you want to be able to catch market updates throughout the day, stop by Mike Bjork on Twitter, and you'll get those updates. Take care. Again, have a great weekend. Bye-bye.